Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. One of the easiest ways to tell a coin's value or where the price is headed is by looking at the mintage numbers. How many coins were minted that year? When it comes to pandas, they're minted around 8 million. Kookaburras around 300 to 500,000, but American Eagles are always massively minted by the, several million. I've been looking, and this is an interesting thing because we see, historically this is for the 1 ounce silver American Eagle, 11 million, back early 2000s. But then we get to 20 million, 30 million, 40 million, 30 million, 40 million, almost 50 million in 2015. And now for the past couple years, it's drastically been cut back. Last year, 2019, there was only 14 million minted, and as of 2020, there's only 3 million minted for February so far. So we're seeing a massive cutback, and I'm curious to see where this takes us, because we know that American Eagles historically are minted around 50 million. There's no reason for American Eagles to be almost the same amount of American Eagles minted as pandas. Pandas are a very short coin. That's what gives them so much collector value. So I was curious, and I started reading around some of these articles and just trying to see. I know that there was the huge American Eagle shortage last year. We all know that, but I wanted to dive a little deeper and see if I could find any more information out, because there's something missing here. There's definitely something missing. And I wonder if it does correlate to the silver shortage, or the massive abandonment of silver mines, as miners are not making it, or aren't as profitable, as Mexico, Peru, Chile, Australia have been abandoning silver mines. I'm wondering if this has anything to do with it, and if it's anything about not having the silver to actually make the coins with, and that's why the cutback is, or is it a profitable thing? So anyways, the two links to these articles will be in the description. This is from RME Gold, talking about the shortage as U.S. Mint is running out of silver eagles for 2018. See, this is when they started to take note of it, and now it's even more drastic. As 2018, there was 15 million minted. In 2019, there was only 14 million minted. So anyways, right now, everyone is looking for 2018 silver eagles, and few can find them. That's crazy. American Eagles are heavily found. They're flooded. They flood the markets, right? The worldwide recognizable coin. But it's crazy to think of this. In fact, the U.S. Mint is running out of silver eagles this year. They have temporarily sold out of them. How do you sell out of a coin that is produced by the mass millions? Interesting stuff. I think there's something more going on here. So, last year, the 2017 Eagles weren't always readily available either, but it never reached a level where the mint was sold out. Imagine the U.S. Mint selling out. That's crazy. What this means for investors. Silver Eagles sales by the mint were up 33% in August from the previous month. This likely contributed to the mint's depletion of silver eagles. However, buyers were also taking advantage of the cheap prices we've been seeing in the metals over the summer stock up. The demand for gold eagles did not increase significantly, though. Buyers are also taking advantage of the high gold to silver ratio and buying silver right now to optimize their precious metals portfolio. So it's saying people might be starting to realize silver's true benefit, that silver is actually more profitable than gold. And that's why this huge demand is here. So the whole point of this, though, is we know the demand is here, but can the supply meet the demand? Gold prices were generally firmer this week and maintained levels from last week. The price were trading in a narrow range, around $1,200. They were up most of the week as the dollar index softened. On Friday, gold slipped slightly after the U.S. jobs report showed robust data. So, what this means for investors: global stocks were down, as well as the dollar. Investors were getting jittery over trade war concerns this week. There was talk of even further escalation of the tariff battle between the U.S. and China. So now we see the Goldman bear market predictor. We and others have been talking about recession predictors for some time now. Some of these are the inverted yield curve and so-called Warren Buffett indicators. Now Goldman bear market indicator is over 40 or over 70%, up 10% from last year. This indicator based on 5 factors: unemployment, the yield curve, inflation, valuation, and growth momentum. See, it's higher now than it was ever before the last 2 markets crashes and essentially flashing red on the forthcoming downturn. What this means for investors: the bear market indicator was at 67% last year, and some analysts were warning of a recession. See, here we go, this recession word, this recession looming again. Overvalued as they are, yes, these markets still have been showing resilience. The Dow is still going strong as the Nasdaq has hit a new record recently. This is the longest bull market in history, due in part to extended business optimism for Trump's pro-business growth tax policies. When it bursts through, there will be far less wiggle room for effective fiscal and monetary policy to aid recovery. Interest rates, despite rising, are still relatively low, and rates in Europe and Japan are near zero. Debt level and budget deficits are rapidly expanding. So whether the next the next crash is long or slow or abrupt, the recovery process will be much tougher. See, here we go into the national debt clock. The national debt clock, or the national debt, is still one of the stories few want to talk about. So you can go to usdebtclock.org and see a live counter. We're $24 trillion in debt right now. See, with the increasing rate of spending coupled with tax cuts, the U.S. debt is on pace to be twice the size of the economy in 30 years. The deficit has increased by 20% in just one year alone. Foreign governments hold $6.2 trillion of U.S. debt, and that number is quickly growing. It costs over $260 billion a year just to pay the interest of the national debt. By 2024, the U.S. could be very well spending more on paying interest on its debts than on defense. What this means for investors: it's absurd to think the debt will ever be alleviated smoothly. Either the country will have eventually defaulted or wipe the balance sheets or continue to print money until the system collapses spectacularly. Whichever way it happens, it will be the downfall of the dollar. Countries like Russia, China are already maneuvering to steer away from the dollar as the world reserve currency. When fiat currencies come to head like this, gold is the answer. So they're reflecting back to why silver, and also why people would invest in this silver. These numbers don't lie. These numbers do not lie. There's something going on. And this isn't for gold. Like, let's look at gold. So 1 ounce gold American Eagles, 1 million back in 1986. We see only 143 million in 2001. We see 2019 only 108,000. So demand is definitely decreasing as well. 2019 was a very slow year for both of those coins, for gold and silver, and I'm curious on why. Is it the miners' fault? Is it mine production abandoning silver mines as silver isn't as profitable, or it's harder to dig out the ground? But the article also did reflect to the gold to silver ratio being higher than ever, in return making people want to chase silver, as the ratio is still sitting very high, very exaggerated, around 88 to 1, meaning it takes 88 ounces of silver to equal 1 ounce of gold. That shows that silver is undervalued. That shows that silver is the much better or the metal with the most potential. And people see that. People are starting to see that, which in return, it comes full circle, because look at this. If demand is high, but the supply can't meet the demand, that goes full circle. See, supply right now is shortened because demand is higher, but in return, that makes the demand higher, because now people are seeing that the supply is shortening, so they want to buy more of it since it's short. So people are seeing less silver is being produced. In return, that makes silver more profitable, so then they want to buy more of it, which means the demand even goes quicker. So the demand's rocketing out of this silver shortage, and people are capitalizing from it. So that could be a dangerous game. That could send silver prices somewhere that we've never expected. And not only from American Eagle standpoint, but as silver as a whole. Because this isn't just from American Eagles, this is just one of the side effects. We're starting to see some of the side effects happening from the major silver shortage, the real silver shortage. I have gone over production. They are trying to boost production in some of these miners in some of these countries, but to what extent? I mean, we've been abandoning silver, and it's been a drought for the last 7 years by the hundreds of millions of ounces, and that's not something we can just catch up to do. We can't just catch up that. We can't just produce that much silver overnight. So anyways, I'm curious what you thought about this video. I'm curious if you think that this has any correlation with the actual silver shortages going on with the miners abandoning silver mines as a lack of profitability, or do you think this is just a simple supply and demand thing? I'm curious. I definitely think there's something that we're missing. There's something deeper that they're not talking about, especially as the US Mint can just completely be sold out of something that they hold so dearly. So anyways, thanks for tuning in this video. Make sure to smash the like button. Make sure you subscribe for new because I do post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.